Hello everyone, this is Rose with Brooks Price Action Team. I'm going to do a quick end of day review on S&P futures. E-mini futures chart right here is today is Monday's October 28th. So we had the day before, which is last week Friday, we had a very bearish price action that day, and the market came down and sold and closed below the moving average. But because we have sold into this trading range and market is looking for possibly a reversal, there are probably buyers here. There's a huge gap here. Okay, so you can take that and find your gap area, and that is your gap right there. So that means this is a bullish gap. That means it is a buy zone. Okay, so I'm going to body to body. So that body opened 68 from Thursday to the close of is on the same day of bar 32. So you can see that this was the first buy, but you're buying against a very strong bear channel, probably minor pullback, and the bear sold again. Is after hours. Okay, look at here. This is the after hours. Is it actually gapped up buying? So that means this second touch right here, after hours, this area, because it's a buy zone, it ended up gapping up after hours on Sunday. And because it's a great price to buy, why wouldn't you buy there, right? It's a great place. All of this is a buy, buy, buy. And then next thing you know is you have a huge gap up on a Sunday evening, and the market went sideways. It's a bull flag sideways, and is London session is trapped at the low of the Asia session. That says double bottom neckline, goes and tests the neckline, and then goes and tests the Asia high. Now we have a breakout, but it's a very weak breakout. We are, after all, still in the London session or the EU session. So you do have 1, 2, 3 wedged up right there. Is most likely market is going to reverse, right? It's actually nested 1, 2, 3, maybe 1, 2, 3. That's not a good proportionate one. So 1 underscore 2 and 3, or double top. So it's looking for a major trend reversal. But is so we the London trapped. So basically this is a consolidation, kind of accumulation, and then you get a nice manipulation there, and then which is a trap, or you can, if it's a trap, then if it's manipulation, you're looking for wedge tops. You're looking for 3, maybe 4 pushes, higher high major trend reversals. Is that started? So we come down and test the London session, Asia session low right before this US session open. If the US session cannot take out the London high, okay, that's going to come back down and test the London low. And that's exactly what it did today. So we ended up getting a wedge top, double top lower high and a bear flag. Look at that beautiful double top. And there's, or double top there, or double top here. It's just a double top. And so you're looking for market to sell, take the neckline. They took the neckline. So the next, that ends up becoming a bear flag. We do have a huge bear flag. Unfortunately, we could not break out, which is kind of rare, not being able to break out from Globex range. So it doesn't happen all the time, but it ends up becoming an inside bar. So we could still sell this because bears still see some kind of a bear flag here, right? And they want to come down and test these lows. So I wanted to see a breakdown in the session, during the session, but we couldn't get it. So it puts us into a major trading range price action. Anyway, so let's get back to the US session today. So US session gapped up. It's a huge gap up, and bar 1 is not a good buy signal bar, and it's so strong, okay, the gap, and we're inside this trading range. And if you are trying to buy here, first of all, bar 1 is not a good buy signal bar to begin with. You should not be buying. But it's also not all that great sell signal bar, but the context is great. You are in a great sell zone area. In fact, that sell zone is measured right about. So here's your first sell, right? Bar 2 is your second sell. Okay, they are selling the close. It's your second sell bar at the open, not necessarily low 2 or anything. But they're selling the close and they're filling the lower wick of bar 1. That right there is a bear momentum. So now you have 2 bear bars from the open. Time to sell. You can actually sell. This is resistance, so it should be red. Okay, unless we break this from above, then I'd be looking for buyers. So now we have 3 bear bars. That's momentum. I'm looking for sideways and another leg down, or 2 for bears. Sideways price action bar 4, and then bar 5, the second leg starts. I'm looking for a market to come down. So my first sell was just around there. So I got a nice almost 1R kind of situation there, but it barely made it. So it was kind of very much of a disappointment for me. But these bears selling, also disappointed with the third leg down. Bar 7 trapped the bears. When bar 7 traps the bears and the bar 8 is a close, it's also news hour, so you know it could reverse, bears will try to sell above bars. Like they're going to be looking for consecutive bear bars, and they're going to wait for market to reach there with the second or third leg, and then they will sell. So you have bar 7, 8, 9 is your first leg, sideways, pullback 9 and 10. And the second leg for bulls begin is none of those bars, 9 and 10, is good enough to sell and bring market back down to these 6 or 5 low to break even for bears. So bears are waiting for the second leg up 11 and 12. And then they're looking for either a good place to sell, which is double top, is a trading range high. You're also inside this resistance, but I would not have sold bar 12. Some will sell the close of it because it's a trading range is with a very small risk, and some will look for a sell signal bar like 13. Problem with the sell signal bar 13 is just too big too fast, and is problem also because you're in a trading range is probably buyers are stuck above 11 or the close of 12. They will buy and try to break even. They will try to bring market back up to the bar 12 close. Because I'm not seeing any bull bars closing and taking out the 12 close or the 12 high, that means this is a break-even event and the bears are looking for a second entry short. Anyone sold bar 13 is disappointed. They will sell and they will try to break even. They're looking for an inside up failure right there with 14, 15, and 16. And the good inside bar is at the high 17. Also 2 dojis at the top of a trading range is a sign of a reversal might be coming. So I'm looking for a sell signal bar. 17 is not all that great, but some machines will start the sell with a stop above bar 1. But I got my signal with bar 18. That's great. That's bar 18 reversal. I can have my stop as high as bar 1 high, and I'm looking for 1R. 1R is right around with bar 19 low, and because it's a trading range, most likely buyers are waiting at the low of 7 or 8. So immediate profit taking with the 1R. I generally go for 1R if I'm in a trading range environment. So here you can also measure it like this, and that would be your 1R. But there's no use of putting your stop there. Put your stop there. So then you look for a pullback to the breakout point or the sell zone, which is the close of 18. There's only one bar, bull bar 21. Bar 17, 18, 19, and 20 are bear bars consecutive. It's a micro channel. They're going to bears. Market will fade the first bull bar they see, which is bar 21. So now the bears are selling. I can hold my runner. I'm looking for a 2R target, which I got it with bar 31. And in that process, market pushed 3 times. Or if you haven't sold, you can also do this. This is a bear flag. Sellers started to show up. One tick underneath is bar 22. So if you sell that, this is your 2R target, and you should actually take profit. That's your 1R. You take a little bit of profit there, scalp, and you leave a runner for 2R. You always want to shoot for 2 times the risk, right? Your reward should be 2 to 1. So is because you're not going to make too much money or a consistent trader if you're just scalping 1R targets. You can still stay green all day and you can find consistency, but you should always find a swing entry and you should always strive for the best, which is if you're risking 1, you should be getting 2 for that. So that's what it was. And in the meantime, they sold again. There's a double top, second sell. Even if you sold so late with bar 29 close, market is giving you the third leg down. But now you have a wedge, 19, 27, 31, or maybe 7, 21, 31. But that's not very proportionate. That's a double bottom. Terrible breakout for bears. But they got their third leg down. So now I'm not keen on selling, plus you're hitting 1-hour EMA, moving average is a natural support. So now you have profit takers started to show up. Bar 32 is a strong bull close, and then you have right there is bull started to buy. So you have buy to close, but you're going back to the breakout level. So breakout is here. Okay, so that means I have some kind of I can take the whole area, but I think there's no use there. I think I'm going to take it from there. So this right here is my new resistance. So I'm looking for bulls to bring us there. And really, I bought here, but I really start the scalp around 29 high. And then I said, well, there are 3 bars, so it's sideways and down. The start of 25 is where I'm going to take the rest of my profits, and I'm going to look for sell orders. I'm not going to sell the first bear bar I see. Bar 36 is an inside bar, is right from the resistance, but not a good sell signal bar. If you do sell, you're selling against a bull channel, probably at the midpoint or the lower third. Buyers are waiting. It's better to sell. If you're trying to swing this, it's better to look for a second entry short. Now, because bulls were stuck up here with 30, 34, 35, maybe 36, they will buy at the low of this trading range, and they will try to break even around here. So this is where I want to give bulls a chance to get back up. And then I'm going to look for a sell signal bar. Bar 39 is right there, is a leg in a trading range. Goes right back to these new resistance. You can actually here is I'll just extend it so you can see. It goes right back in there, but because it's a leg in a trading range and you're in a limit order market, market now is giving you another bear bar with bar 40. It's also midday reversal. I don't know. We're kind of in the middle of this bigger trading range. So what is happening here? Well, you got limit order market. Market is betting against strong closes, such as bears betting against 39 close, right? And you got moving averages are going parallel to one another. Another sign of limit order market. That means when you get a gap down from a moving average, bull machines will bet against any strong bear closes, like 27 close, like 38 close, like 45 close, until they get a stop order market. But I'm looking for a swing here, and I entered short there. So I'm selling. I'm looking for at least 2 legs down. Market comes back down, but the one thing that the bears fail to do, they can't seem to close below the 1-hour EMA. Not able to take out the 1-hour EMA, so bulls are trying to reverse this back up. So you can see this is still a bet against market with the limit order conditions. So the bulls now buying the close of 45. So I'm expecting is bar 44 high and then the bar 40 high tested, but I'm kind of not very interested in buying this, and the reason being is, again, is we're above the moving average. Also, when you gap up from the moving average with bull bars, bears will try to bet against bull close. Strong bull close is like 49, like 53 is like 56, and they're going to try to sell it. Plus you have a bull flag there with bull spike, pullback, and channel. So you do have a channel here, and this is your pullback. So this is your pullback. So I told everybody is I am struggling to buy here, and I keep buying at the low of that channel and breaking even, but I'm not able to see any breakout to go and test the bar 21 high. I did my best, and the market tried once and twice with 53 and 56 and failed. So now I told everyone we're going to come down and test this bar 48, and if we start to take out the 48 low with the bear closes, expect market to come down to the 46 open, or the lower third of 46, and then look for buyers there. In the meantime, I'm counting a couple of legs down. So I've got leg 1, leg 2, leg 3, and a double bottom. Bulls are looking for some kind of a flag here. Is maybe here is the flagpole right there. Here's a double bottom. They try to buy and get back up here. They failed. Now they're printing more bull bars. They're not able to take out the 45 close. Is there's no gap bar here. This was the bear gap bar. They moving average gap bar, and the bears failed to take out its low to turn the market bearish. So now we go up, we have bull gap bars, but the bulls are not able to take out their high. So that means we're just going to go sideways. It's a neutral market. But in the meantime, I have this invisible resistance that I'm keep pushing or extending is towards the right, and I see that there's some commonalities here that we're not able to break this resistance to get back up here or the open of the day. So is I started to favor the sell orders. Okay, so I'm seeing right here is a possible double top, lower high, maybe a much better, or a truncated wedge 1, 2, and 3, and a double top, lower high. So I'm looking for is consecutive bear closes. Failure over failure is swing with consecutive double tops and double bottoms. I got it right there. So if you sell below 75, you put your stop there. That's for the target measurement. Your stop can be above lower highs like bar 56 or bar 65. But this is only for 2-hour measurement, and that was my 2-hour. You can see the market came down, is I have taken profit. I also find that target with bar 78 is that was no, actually that target was here 60.25, but this target right here was a 2-hour, but it's also the test of these lows. I am not seeing any bear bars closing below the moving average. This area is still holding. It is the end of the day. You have to take profit. It's several legs down. You got an inside bar 79 at the low of this trading range. Buyers are coming in to reverse the market, and then we just reversed at the end of the close. All right, so is market was pretty much is all trading range trading, then try to get a breakdown and a measured move, but it failed. So basically I'm looking for I'm buying in the 10-point direction, selling in the 10-point direction, maybe 15-point, but really I favored 41, 42 tick runs for both the bears and the bulls. Now is for tomorrow, we are an inside bar. It's kind of we might still go up. We're in a look. Bears haven't really sold anything is good enough to bring market down to the moving average. We are kind of in the crossroads. Bulls still want to get back up to these highs. Bears see a double top there. They want a lower high. But look where we are. Today's bar actually did close, right? So I have an outside bar followed by an inside bar. But now this is no longer is what I want to measure. So my new range is actually right here. Why? Because that one actually reached the target. This is my new outside bar followed by a new inside bar. So I am now interested in this bar, outside bar, and that inside bar. So is we have closed the bar below the midpoint of this outside bar. That means tomorrow Market is going to want to sell in here. The first buyers will show up there. If we go up here, they could sell again, but remember, this is daily. So this is going to happen. It's not going to happen like that. It's going to happen at one go. So I think we could end up opening up around here tomorrow. I don't know if they're going to sell after hours. They might, because I do see on the 5-minute chart a bear flag. So if we open up around here, we're going to buy. We could go up here tomorrow, and then at one go, we start to come down. Tomorrow, if market decides to close a bear bar around here or breaks out, okay, from the outside bars low, I call that a mother bar. These are all games. These are all targets. So tomorrow we could actually become very bearish and come back down and test these lows, and market is looking for a bull flag. So it wants to have a double bottom probably with that low, move the market underneath the moving average only to trap the bears and then go back up again. So it's going to be very interesting. So we're going to open up probably somewhere here. So this is what I'm looking for. If we open up here, we're going to go there is okay. And then we're going to start to come down. If we keep breaking down and breaking down and breaking down, that's going to be my first target. Maybe this is all we do, and then we could go and maybe close back at either there or here. If we close there, a body, then the following day we're gonna even be more bearish and continue to sell. So market is trying to close bear bars and turn bearish, but we really need to see bears actually bring price down to the moving average, and we're not seeing that. And bulls are still looking for bullish targets to the upside, and they want to resume the trend because this is a broad bull channel. Bulls swing, bears scalp. If bears are only scalping, that means we're looking for buyers. It could be around the moving average. Maybe we get a double bottom, then we could make a new all-time high again, but we'll see about that tomorrow. Tomorrow is Al Brooks and Brad Wolf combo, so don't miss it. I come back on Wednesday and Thursday, and I'll see you guys tomorrow on Discord. Bye, everybody.